This will be a recap on 0410 RTH session. On the left, we have an ES market profile chart. In the middle, we have an ES 5-minute chart. And on the right, we have the NQ 5-minute chart. The market had a strong liquidation in pre-market, and this bled into the RTH open. This is a 5-minute footprint chart for the ES. As I was mentioning, the pre-market sell-off bled into the open, and we can see from the first 5-minute candle that it experienced and caused a quick downward move with activity into the lows and into the 935 column. We actually ended up meeting a buyer that was able to rotate back to the highs. With this tape mentioned, I start to get ideas of this area becoming a valid auction. And to denote this, I'm going to box out the lower end in blue for responsive buyers and the upper end in red for responsive sellers. Bit of a clue here where we're able to sell off right from the open. We rotated higher after meeting a buyer, and they were unable to penetrate kind of like the seller's area. This caused a rotation further lower, retesting the responsive buyer zone, and we can see that the buyers end up absorbing and then pushing out and initiating back to the highs and even higher. I imagine I'll be getting the question of, how do I know that this is a valid auction? And that's a great question. Feel free to leave further questions into the comments, and I'll probably attend to them. A lot of my trading comes from meeting a buyer and then meeting a seller, and that becomes kind of that interim line in sand between the two forces, right? Activity into the extremes of the current auction is a very telling sign that there are two time frame participants present, and they are both trying to impose their will upon the other force. And so at the highs of each rotation, we can see that there is activity from both buyers and both sellers, and they're kind of playing this tug of war for dominance of price. I'm going to quickly refer to this NQ chart. It's a 5-minute candlestick again, and highlight this tweet at 9:54 that I posted, which would be right along this candle. And it was at which, on the NQ DOM, that I noticed a very active buyer starting to enter the market, and he was doing so with what I saw as intentions of protecting the low. This is when I dropped the tweet that 980 is going to go bid, and all of these longs on FinTwit are saved. Jumping back into my footprint setup, 954 again, this would mark the second touch of the responsive buyer zone. And I just want to go over this really quickly, where we end up seeing very active tape the entire auction through. They're all relatively of the same volumes of what you can expect. And coming into the second touch of the responsive buyers, we end up seeing a lot of absorption. Obviously, it's going to take some time to realize this, but we see 1,000, basically another 2,000 offer going into the lows. And the result of which is that buyers are able to hold it, protect the low of the day, and this ends up unwinding on late sellers, causing a rotation to the highs, forming a small trap, and popping and extending even higher. I find it interesting to note that this activity of absorption and then kicking or initiating out is a constant theme that repeated itself throughout the session. And this actually happened all the way up to 41.16 swing high. So now at which, when we defined the two ranges, we can almost theoretically scoop up the same responsive buyer zone and imagine that he actually propped his orders up higher, which, could explain the first trap the first trap that was sprung at 4104, caused rotation high. We then falter lower. However, the responsive buyer from down here ends up, to me at least, the same buyer ends up holding up the bid and catches more inventory, further rotating higher, does it again. Almost if we scoop the same box up again, you can imagine that this other time frame buyer is just pushing his order to buy, his limit orders up and up again and up again. And what this end up finally causing, which is a little more prominent on my reversal chart, but I'll show that as well. We end up meeting a seller at the highs. And this, I'll get to that in a minute, is kind of like a very tricky nuance to trend day setups. But nevertheless, this is a good rotation or a good distribution container that I want to go over. So jumping over to the footprint rotational chart, or the reversal chart rather, we can see that the same inventory is being, or sorry, the same information is being displayed, but in a slightly different way. So here we can see the auction starting from the highs, coming into the lows. Again, it bounced from the responsive buyer zone to retest the sellers, comes back down with aggression. All of this activity gets absorbed, and we see the sell imbalance all just taken up. And this was like a very large clue for the NQ tape. Large sell-off, large tape bombs coming into the low prints, getting absorbed and then kicked out. And from here, price actually travels higher, retests and pokes above the responsive seller zone. We meet the buyer coming into this 4104 handle, and this pops the highs again, reloads and pops again. But now it's this interesting nuance and this familiar title where I say that if the ES knocks 3 times, get ready for a change. And that's indeed what we end up seeing. We see an attempt at extending the range higher from 4114. This fizzles, meets 4111, more iceberg, or that's not what really an iceberg. It's more responsive buying that comes and appears and pushes price back up again. But on the third attempt, after failure to extend above, say, TPO structure, we end up flushing. And this sell-off is quite convincing. I was actually a little surprised at the strength of it, crushing previous pivots that the buyer was holding up once again. And then into here is when I actually wanted to highlight this example that I actually view this as a pulled bid liquidation, i.e. it's not going to actually accelerate and break any structure until proven otherwise. And I'm going to just jump back into the 5-minute chart since it's a slightly more telling of the story. But in this 5-minute chart, we end up seeing this absorption by sellers into the highs, and this causes the late longs to liquidate when price goes against them. So we end up seeing this failed breakout, move down, a move further down, which breaks previous supports, and then something starts to change into this 4102 handle. But I'll get to that in a minute. First, we're going to unpack the idea of pulled bid. And we can see that very prominently if you know what to look for. And a very large clue that I mentioned to my students is that the number bar calculated values, this chart on the bottom, has to have activity. And if I just pan over to the left, we can see that we have relatively the same amount of activity at the open prices. And so when something's changing in intraday at significantly lower aspects of cold calcs is what I call them, it's definitely a clue that's worth looking into. And I saw that we end up having low bits of volume for this sell-off, high delta coming in negative, and coming in negative 13,000, 13 again. But that's all just caused because there's not a bid to actually take in further selling. And so as the sell moves aggressively, it's actually being done on fairly low and quite light volume. And so it's pretty interesting to note when I was able to spot this idea and confirm it. The dominating offer washes upon the first sign of bid, and I wanted to highlight this 4102 exhaustion. So we only had 41 prints into the low. If you were watching the sell-off, we end up actually seeing, like 200 lots, 300 lots, 500 lots, and that was kind of all trickling down price. But once we got into this low, 4102, I noticed that the pace and the fear was gone. We printed a very low print. I'm pretty sure it was like actually 40x0, and then only one additional print into the low was able to be traded before it started to slowly accumulate higher. This was the clue that I found on the DOM. I put the 2 and 2 together and mentioned that sellers actually never intended on breaking the lows. All offer was shut off into the previous bid, and from here we end up initiating. Jumping back into the ES TPO or market profile chart, I'm going to highlight these two formations here, which results in the 0410 RTH action. So from here, we end up seeing this like auctioning into the lows with one final liquidation break that could not even break responsive buyer's price, and nor the low of the day of current or previous session. Obviously, there would be a ton of liquidity available there. This buyer, however, had something else to say about it. This liquidation break stopped again around the 4102 handle, and this is also similar to the gatekeepers tweet that I posted on NQ for the same session. Once the bid firmed into the lows, again it kicked up, initiated to the highs, leaving a ton of low volume area prints into the next auction, and then one time framed higher with an eventual late day spike up to 4140. Pretty much all history from there. I think that the intraday action all happens from the open, and the decision to not penetrate the lows after, balling up this weakness at 4115. That offer came aggressively. It was, in my imagination, the pulled bid liquidation. It was reacquired by the previous buyer that started this whole move, and then initiated higher into a new auction. Again, auction further, and initiates further into the end of the day. I mentioned earlier in this video that there was this concept of a trends day container forming, and you'll notice that these patterns are very repeatable in the market. And this classic example of trend day is in which a buyer, or rather an other time frame player, appears and enters the market. They're able to manipulate the price, favorable. And so if we take that 4100 buyer, he's able to prop up price to 4115. And they like to do this thing. I say they very lightly. It's just the way the market works, and it's a good move, honestly, in which the buyer that scooped up all this inventory ends up just unloading, or in easier sense, just taking profits at a favorable location. And what that allows to do is it sucks in late longs, or in this case, the late longs, but we call them the laggards. They get baited in by the movement of price, and then the other time frame player just simply unloads on them and causes price to go against them. So if we imagine that this buyer scooped up, 50,000 lots at the lows, he then takes profit on half of them, causing this 25 to sell imbalance. Well, as he closes those positions and price returns back to his entry, it's kind of like a no-brainer that he's willing to defend and just reload whatever he dropped off, right? If he unloaded 25, he's going to scoop back 25, if not at the hard price of his re-entry, but somewhere along the lines. And that's actually what causes the initiation. Another time frame player is present and is able to push price higher. The rest is pretty much history, in which we just auction further in somewhat of a coiling up range, and then we initiate with a late day spike at the end of the day, tagging 4140. That's pretty much the container. Textbook other time frame player builds a position, offloads on the laggards, refills on their stops, and then a directional continuation. And that idea was actually seen on Thursday, the before holidays. Thursday, we had similar tape, and this pushed into the lows, but failed to continue. I gave it a chance all the way up to the 16s, where I ended up getting stopped out. I made this comment that the seller was out of the market, and the information that you learn from a previous session is often carried into the next. So coming into this session, and I see that, obviously, we had a good pre-market sell, but if the sell never intended on breaking the lows, it's information that I learned on the previous session. I'm definitely going to carry that into current and see if continuation is expected. I posted this idea that with the failed breakdown intraday, trend was going to form against the sellers, so an upwards move, and intraday trend was to be formed, targeting 35s, and then an unwind to 40. On the Thursday session, that's pretty much exactly what happened. A failed breakdown, traded higher, started to trend intraday, so we have one time frame up, and then we closed at the highs, but failed to unwind and poke 4140. this Monday session ended up opening up. It's like, to me, very similar ideas. Obviously, we were gifted a second entry long-wise with the successful liquidation. The Thursday session actually ended up not having a very great liquidation. It was actually pretty cloudy, but this one was pretty prominent, very empty offer into the lows, as I mentioned. It was just a scared offer. They weren't ever intending on breaking lower. And then we ended up getting that final push to the highs with the unwind in 41.40 to trade.